Lots to chat about. Rahul Shah from Motilal Oswal Financial Services and Mitesh Thakkar with us to talk about the charts in the markets right now. But as we're at that 8K mark, like we've been pointing out, it's coming after a long haul indeed. The Nifty has moved from the 7,000 mark to 8,000 after a long gap of 58 sessions. We're up a good 14.6% since the last budget, and quite a bit of factors really contributing to this particular move in the markets right now. And quite that has gone right in the sprint to that 8K level. And just quickly to highlight the factors for the cheer for the markets of late. The brokerage upgrade that have trickled in off late, both from a Morgan Stanley as well as HSBC as well. You've got Q4 earnings which are slightly better than what the street has been expecting, and we are seeing that play out with an LNT today. You also have monsoon, which is almost here, and we've seen sporadic showers in Mumbai itself. So early showers witnessed in spots across the country as well. You've got global cues which are improving. In fact, a couple of notes from brokerages seem to be indicating that perhaps global markets are already beginning to price in a Fed rate hike in the month of June. And we've seen that how strong the rally in the global markets as well has been in the last two trading sessions, aiding and only catapulting our market move. You've also got DII flows which have been very strong. Just in yesterday's trading session, both FIIs as well as DIIs were net buyers, remember. And yeah, they are making up for the FII profit taking which has happened in the last many trading sessions or so. So let's bring on board Darshan find out whether expiry is going to be as smooth as it has been up until now. Darshan?
See, we were elusive to the 8,000 mark for the at least past two expiries. We came very, very close. In fact, the last series saw 8,000 being hit on the futures, but today the spot is taken the 8,000 level. Now, if you're looking at how the market has moved, it's the Nifty has actually moved over 2% as far as the series is concerned. The Bank Nifty is up almost 2.5% in trade. Now, just look at the Nifty PCR. 2 days ago, Nifty PCR was at levels of 0.87. Now it is at 1.16. So you can see the amount of call that have been shed and the amounts of puts that have been added. So put writers have actually massacred the call writers over the past 2 days. They didn't know what hit them. So the premiums went up significantly on the call side. Now, if you're looking at what happened today, at one point of time, the 7,900 put, the total open interest crossed the 1 crore share mark. So there was significant amount of support coming in for the market at lower levels. Now, as far as the next series is concerned, call writers are shedding positions at 7,800 and 7,900. And for the next series, they're taking positions at levels of 8,100 and 8,200. Put writers in the next series are taking levels of 7,700 right up to levels of 8,000. So the support for the next series is extremely strong at this point of time. What are the top performers as far as this series is concerned? L&T, Asian Paints, Tech Mahindra and HDFC are the top performers as far as the series is concerned. What dragged the market? Asian, Adani Ports, Bank of Baroda and Cipla. These are the three counters which didn't do well. Overall, the best performer as far as the series is concerned is India Bulls Real Estate, which has grown 50% in this series. And Shriram Transport, AB Nuvo and HDL are among the top mid-cap performers. But it's a clear 3-day rally for the Nifty, and the call writers actually didn't know what hit them over the past 3 days.
Oh, yes, indeed. Thanks very much for rounding it up for us. Let's also get in Pranay then and talk about some of the moves that we've seen from the budget day lows and which are the stocks that have powered ahead.
Well, Avan, Nifty has rallied about 17-18% in these 3 months. And if you look at the spread of stocks amongst the top 10, all of them have given gains of more than 27-28%. So that's at least 60-70% more than the benchmark index, which shows you the strong performance in individual names. And actually, you have 3 or 4 of them which are banking names over here. So, for example, Yes Bank, Axis, IndusInd, they've all given returns between 35 to 46%. Yes Bank actually takes the lead over here, and we've seen the strong momentum in the earnings, particularly for a couple of these private names. Not any of the PSUs to be found here. BHEL is the star performer when it comes to the capital goods space, and we saw how it saw a lot of value investing coming in the last 3 months, when we saw strong pickup in the order inflows as well as prospects domestically. Besides that, L&T, the biggest move has come today actually in the last 5 years for the counter, but overall it's still given a return of more than about 33% in these last 3 months, and Tata Motors is the top mover from the order pack. That's because of the strong performance we've seen from JLR when other auto majors globally, especially the German ones, have been hit by emission scandal. When it comes to the broader end of the market, Nifty Midcap Index has actually trailed a bit and risen only 15% versus 18% for Nifty. But over here, if I look at the top 10 stocks, they've given returns in excess of 35%. And actually the top 5 have a return of more than 40% over here. So M&M Financial Services is one that saw a very sharp short covering in the last 1 month, followed by a fresh long. So that has given a return of 53% in 3 months alone. And if you look at Voltas, that too has been the top performer from the consumer durable space, giving a return of 50%. Piramal Enterprises, the diversified conglomerate, too has rallied very well over here, along with Century Textiles and L&T Finance.
Okay, we're going to leave it at that. Darshan as well as Pranay, thanks much for walking us by how the trade is actually shaping up. But just emphasis is earnings, and let's just flash them for you on your screens. There's been an exceptional loss that the company is priced in this particular quarter to the tune of about 34 odd crore rupees. So largely in line, you'd have to say 155 crore rupees on the PAT versus the ET Now estimates of about 183 odd crore rupees. The top line, that's come in line, 15-17 crore rupees. We at ET Now were pricing in about 1533, and the EBIT has come in at 215 to 13 is what our estimate was. The margins have come in just a tad better than estimate. So largely an inline set, you'd have to say. Of course, it's the HP channel which continues to decline for Emphasis, the direct channel which is going to witness growth. So one needs to see what the management commentary with regards to these two is, and the fact that they're expecting a quarterly run rate for the digital risk to fall in the fourth quarter after 3 quarters of a strong run. The street is not quite enthused by these numbers. The outlook on the stability of the HP channel is what one needs to really look out for. And of course, the deal win, TCV in direct international business, which is about $61 million in the third quarter. How is that really materializing and panning out for them? And of course, the margin outlook. The margins look in line right now, but you're seeing a bit of a sharpish reaction on the stock price. Mitesh, good day for the market. 80.24, it doesn't seem like we're letting go of that 8,000 mark today. What's a prudent Nifty strategy?
I think, right now I don't have a fresh strategy, but the way I think traders can approach it is that if somebody has really not been participating in the last 2 days, buy half now, wait for a 30-point dip, buy around 70.90. I think keep a stop below, 79.90, and I think keep a stop below 79.70. I think the way we have broken above this zone of 78, 88,000, I think we should head towards 8150 in the next few days.
Okay, let's get in Manas's picks as well. And Manas, run us through what you've picked out for the day.
My first pick is Dhampur Sugar, where stock rallied smartly in the month of March and April. In April, it made a high of 100 rupees. Then it corrected. It took support near to 50-day moving average 2 days back, and today it recorded smartly with great volumes. Oscillators are showing positive crossover. So possibly we may see further up move in Dhampur Sugar. It can again test its a recent high of 100 rupees. So 100 is our target. One can buy it with a stop loss of 88. And second call is a buy call on V-Guard. In the starting of the month, the stock rallied smartly from the level of 950 to 1250. But for last 10-12 trading sessions, it was facing some resistance near to 1220, 1230. Today, it broke that resistance. So I think we may see next leg of rally. Stock can come up to around 1375. So one can buy V-Guard with stop loss of 1235.
Indeed. Mitesh, what stocks are looking attractive to you?
On the stock side, I would suggest buy on Kotak Bank. I think that's one stock which is, kind of reversed from the lower level. So buy with the stop at 714 for targets of around 740. And I have a buy on Rel Infra as well. I think the high beta space is kind of coming into some kind of action. It needs to get past 518, 519. So buy above that with the stop at 508 for targets of 540.
Okay, those are topics to watch out for in trade, but let's keep it then with earnings. Focus in on the management of quality. Just walk you through the numbers. Managements have been substandard. Profit has come in lower by about 2.3% and the top line growth at 1439 crores. Naval Sharma, President and Head Business Transformation, joins in on the show. Let's talk about the highlights of the quarter gone by, particularly what is the reason that your top line growth has been a tad slower compared to your peers? What's the reason?
See, now since our annual results are out, so let me just share with you key highlights. See, we as an organization are focusing on holistic growth of the organization, right? So when we talk about holistic growth, there are three layers on which we are working. First layer is the strategy layer, second layer is the framework layer, and third layer is the operations layer. It's on the operations layer that we talk about numbers. Now, numbers is nothing but a consequence of what kind of strategies and frameworks you are using. So I'll just spend some time to give you a full picture in a couple of minutes so that you have a full perspective and understanding as to what is the rationale behind how these numbers have been delivered and what is the future growth path, right? So some time back, post a lot of internal deliberations and workshops, we took a conscious business decision to move from B2B to B2C space. So that was a strategic shift that we have taken. But I'm sure you will agree it's easy to crack the strategy layer, but it's very difficult to have the seamless implementation on the ground. So as to ensure a seamless execution, we worked on framework layer where we developed this comprehensive business transformation program.
Right. So what's the reason for the slip in the margins as well as EBITDA then?
I tell you, so far as the quarter part is concerned, these are all aberrations. You have to analyze organization holistically, right? For example, let's say last year it was 6.3%, now it is 6.6%, right? So there has been a slight increase in the EBITDA margins. And from here onwards, you will see a positive swing only. And there is a reason behind that. So when I say there will be a positive swing in EBITDA margins on year-to-year basis, there is a reason is, very soon we'll be starting the rollout of these value-added products. These are high-margin value-added products, right? The moment this product mix will change, you will see a direct impact on the overall profitability or the bottom line of the organization. And so far as quarterly aberrations are concerned, that we should ignore. See, we should see holistically and on a long-term basis how the trajectory has been. So trajectory is in a positive side. So last year was 6.3%, this year it is 6.6%, and we are yet to out and launch our brand campaign. So once brand campaign will break, one there'll be a lot of hangama in the marketplace. So far as the brand front is concerned, you will see a lot of activity. Some 8 to 10 new variants of high margin value added products will be rolled out over the next 12 to 18 months time. It will have all direct impact on the bottom line EBITDA margins, and the overall profitability and health of the bottom line will definitely increase. And there is a positive signal.
Let's talk about how much has the value-added segment like ghee, lassi, etc. contributed to your top line as well as to your margins?
We are yet to roll out high-margin value-added products, and the category where we will be launching products are like flavored milk. We are talking about Tetra packs. We are talking about butter. We are talking about cheese. So these are the different categories, and paneer is also there. So these are the various categories where we'll be rolling out different variants and very innovative and feature-rich products over a period of time. So once these products are rolled out, you will see a huge improvement.
And what is it that we can expect from you in FY17 by way of top line margins as well as volumes?
Yeah, see, as I always say, we are governed by certain regulations of SEBI. So it is not advisable to quote some future numbers, but definitely I'll give you, let's say, a rationale as to what is that you should be expecting. Now, see, once a company is strategically shifting from B2B to B2C, and company has lined up, let's say, a series of value-added products for rollout in the next 12 to 18 months, and which will be supported by huge, let's say, brand support, right? So definitely you will see the traction to continue. This momentum will continue over the next few years' time, specifically in favor of B2C part. So there won't be any letdown. I'm sure all the customers and investors will be very happy the way a company has delivered in the past and the way it will deliver in the future. And the confidence is derived from the strategy, the robust strategy that we have, and the robust framework that we have, which is a business transformation program, which will ensure that we will continue our momentum so far as increase in top line and bottom line is concerned.
Okay, thank you so much for taking time out and joining in, giving us a view, Mr. Sharma, as to how things have shaped up for quality and the outlook going forward. Well, in the meantime, we're staring at a level of about 8,023. We're up 325 points on the Sensex. Can't really get your eyes off L&T. You've got SBI, ONGC, BHEL. Those are some of the key heavyweights as well, which are holding out. What about the top movers and Shekhar Zen? Mubina's here with the list. Mubina, walk us through the three top movers.
Well, the first one is Nalco. Remember, yesterday the company had its board meeting wherein it approved a buyback of about 64 crore shares. That's 25% of the equity for 44 rupees a piece. That roughly comes to around 2,500 crore rupees. Now, Goldman Sachs has come out with a note on this buyback. Naturally, this 2,500 odd crore rupee outflow is something that's going to impact the cash balance. So, what they believe is that the FY17 PAT is going to be lower by about 50% due to the lower interest income. So, that's something that could be a negative, and even, of course, EPS dilutive by about 33%. In the meantime, KNR Constructions as well is a company that you must look out for. It has won orders worth 415 crore rupees from the Ministry of Road Transport and Highways. It is for the contract for rehabilitation of the National Highway 209 in Tamil Nadu. EPC-based order that is to be completed within 24 months. And lastly, Adani Power has rallied on the back of the fact that the company has announced that it has issued 38 crore convertible warrants at 32.54 rupees a warrant to promoter group entities. So basically, it has been able to mop up almost about 1,237 crore rupees through the issue of these warrants.
Okay, Mubina, we're going to leave it at that and also bring on board Rahul Shah then from Motilal Oswal Financial Services to talk about what he's picking out in the current market as we've climbed up to that 8,000 coveted level. And Rahul, it seems like Britannia is a stock of interest to you.
My view on Britannia, I think we have seen that most of the FMCG companies which have reported numbers where we have seen that wherever there's a volume growth, I think, and margin expansion, those stocks have continued to do well. So be it in case of in consumer space like say Pidilite, or maybe in something like ITC or Imami also. So I think it is same as Britannia. So I think Britannia, the margins have expanded, volumes have grown, and I think that the company transforming from complete biscuit to also into a dairy products as well as. So I feel that. This shift will also bring add revenue plus expand the margins, and obviously the Britannia has been in the premium segment, and it will continue to remain that in premium segment side. So I feel obviously it's expensive in terms of valuation, but this premium is obviously because of the premium in the markets which they have. So it's expensive and it can do well. So we believe that it will trade at 35 times forward, and investor can get 25% upside in here.
And walk us through the next pick, Repco Home. Why do you like this one?
I think housing finance space as a whole has completely looks overall poised for a growth for next at least 2 years. So in that space, be any other mid cap names, but I think Repco looks one of the top pick from our end. So the company has grown from 2010 to 16, 26% in terms of earnings. We expect that in coming FY17, FY18 also. So 30% sales growth and 26% PAT growth in that. And obviously the rating upgrade will help them to reduce their cost, and which will help for improving their earnings as well. So obviously it's trading expensive, but not as expensive as the other names like Gru or so. So I think 3.5 time book forward we will value, and then we'll have a target price of 800 in Repco Home Finance.
Okay, Rahul, good chatting with you. Thank you so much for taking the time out and speaking with us today. Leave the market in ship shape, and it seems like it's going to be another strong, interesting last lap of today's trade. Let's only hope that we manage to close above that 8,000 mark today. Out of time, up next, closing trades.